Our next guest runs the world's second largest provider of temporary workers. He's here to tell us where the jobs will be in 2010. He's Jeff Joerres, the CEO of Manpower, and he joins us from the Manpower headquarters in Milwaukee. Good morning, sir. Thank you so much for joining us. Let's get,
Great to be here.
First off, your initial reaction to this morning's weekly jobless claims number, which came in better than expected. What does this suggest in terms of outright jobs growth?
Well, I think what we've been seeing over the last probably 2 to 3 months is definitely stabilization and just a hint towards trying to get a little bit better. The jobless claims that comes out on a weekly basis is really the right number to look at right now. The unemployment numbers are a little distorted, and we can possibly talk about that. But the jobless claims, we are starting to see that there is companies that are wanting to and have the ability to hold on to people because they're getting enough demand for their products or services.
Now, to what extent is the latest jobs data, whether it's jobless claims or the unemployment rate, which you say is a bit more distorted, consistent with what you are seeing anecdotally?
Well, I mean, actually, if you look underneath the unemployment number, you'd see that there were 51,000 jobs created in the temporary help space. That is a good sign, because that's kind of the classic part of a recovery where companies are hesitant, as the RBS economist had said, are hesitant to bring on full-time because they don't quite have that sustained demand. But they have more demand than what they have resources. So what we are seeing from an anecdotal perspective is we are continuing to see week over week slow but very steady increases in the number of people that are out on assignment.
And what sectors is that happening in?
Well, actually, it goes across a lot of them. I mean, when we really look at it from the broad base of manufacturing, and one of the ways we try to look at what's happening in the recovery is it one client or just one industry, because then we're a little bit more suspicious. What we see here, and in fact across the world, is it's a little in every office, which is a good sign because it's broad based. So it's manufacturing, it's services, it's non-durable, it's durable. Each one of those might have a little different flavor, but for the most part, it's across the board a nice steady lift.
How about regionally and geographically across countries and state lines?
Well, when you really look at it, I think that goes a lot with what you're seeing from a consumer perspective and also what you're seeing on housing. The area that we're feeling the biggest strength, and what our Manpower Employment Outlook survey said for the first quarter as well, was that the South was going to be a bit better, Northeast and Midwest about the same, and the West a little bit more, lagging a bit. So we're seeing the majority of these jobs right now coming in kind of that classical light industrial service area in the southern part of the United States. Some of the heavy manufacturing states in the Midwest are lagging a little, and then clearly banking and finance on both ends of the coast are a bit hurt right now.
Jeff, what needs to happen before these companies start turning temp jobs into permanent jobs?
I think this one will lag a little bit more. You've heard about it, and it's been coined back in the 90s, this notion of the jobless recovery. And really what you're seeing is companies are being much more refined in how they're adding people on based on their demand. So really what we're going to see is probably an extended, because the demand is still a little bit sluggish, we would probably say into the second quarter we're going to see this slower growth probably in our industry before we see the permanent hiring happening in the second, maybe third quarter. End of the second quarter, third quarter of next year.